Yeah, it's math at this point.
Mm,
You're just going back to what we were talking about before, the unsustainable of the unsustainability of the federal debt. The collapse is going to come. That is a mathematical fact. The question is how long.
mm.
And maybe participants are looking at it and saying, well, it would have been an immediate rug pull after Kamala got in, and now it's not going to be an immediate rug pull. My guess is probably June or July of next year, after 3, 4, 5 months of Trump being in. That's when reality is going to really set in.
Over the past few years, popular precious metals broker and analyst Bill Holter has repeatedly warned Americans about a looming credit event, which he says will be marked by a massive explosion of the global debt bomb, widespread bank failures, a collapse of the credit market, and a complete collapse of the fiat monetary system, potentially marking the end of the U.S. empire. His argument centers on the unsustainable debt levels across sovereign, corporate, and household sectors, coupled with a highly leveraged financial system that relies on continuous credit expansion. According to Holter, this structure is fragile and vulnerable to a loss of confidence, which could trigger widespread defaults and systemic failure. Central to his concerns is the role of fiat currencies, which are not backed by tangible assets. Holter argues that decades of monetary policy driven by quantitative easing and artificially low interest rates have created asset bubbles and distorted the economy. In his view, the system depends on confidence rather than intrinsic value, and a major shock, such as a significant geopolitical event or a key default, could cause a chain reaction that collapses the global financial framework. Holter foresees dire consequences if such a scenario unfolds. A collapse of the fiat system could lead to severe economic contraction, potentially hyperinflation in some regions, and widespread social instability. In a recent interview with Capital Cosm, Holter reveals that the days of kicking the can down the road are over, and we have less than 1 year before everything begins to unravel quickly. According to the renowned analyst, the outcome of the U.S. presidential elections gave investors a little more time to prepare for what's coming, but there is just no way to stop the looming collapse. Holter advocates for tangible assets like gold and silver, which he sees as reliable stores of value outside the fragile fiat framework. He also suggests that this crisis could force the emergence of new monetary systems, possibly involving gold-backed currencies or blockchain technologies, as the world seeks a more stable foundation. We'll be sharing clips from Bill Holter's insightful interview, where he discusses the state of the U.S. economy, the weaknesses of the fiat system, and the value of alternative assets like gold and silver. Be sure to watch until the end, like and share this video, and subscribe to our channel. Don't forget to hit the notification bell for updates on more valuable content. Thanks for watching and enjoy the video.
I viewed this as an election between who is gonna preside over the bankruptcy of this nation.
Mm.
I mean, mathematically, this thing's going down, and in my mind, it was a question of whether we go down under the rule of law of the Constitution, or whether we go down under the rule of their law, which is a sliding scale. It changes depending upon the situation. So that's first and foremost. I think people are happy that the House, the Senate, and obviously Trump, it's all one party. The problem with that is there's not going to be any breaks whatsoever on spending. Whatever they want to spend money on, it's going to be like a rubber stamp. Boom, let's spend the money. We've got close to a $36 trillion deficit now. And I would imagine 4 years from now, that deficit or the debt will probably be 45 trillion or more. I mean, I would imagine they'll add another 9 or 10 trillion if markets allow that to happen. And I don't think that's the case. And I don't think that's the case because we're spending too much money on interest only. I mean, we're this year was 1.1
The interest
trillion.
payments.
Next year is going to be 1.5, and within 2 years we'll be paying 2 trillion in interest only, while we're taking in 4.7 trillion in tax revenue. We're going to be paying 40% of all tax revenues in just interest alone. That's not sustainable at all. I don't know if they're getting ahead of this, but I mean, think about it. There is so much waste everywhere. You're talking about, $250 hammers and stuff like that.
Mm-hmm.
That's got to stop. but it doesn't matter if it stops because what's already in place is not sustainable. So
Yeah.
they can stop the craziness, but they can't fix what's already been done. Yeah, it's math at this point. And just going back to what we were talking about before, the unsustainability of the federal debt. The collapse is going to come. That is a mathematical fact. The question is how long. And maybe participants are looking at it and saying, well, it would have been an immediate rug pull after Kamala got in, and now it's not going to be an immediate rug pull. My guess is probably June or July of next year, after 3, 4, 5 months of Trump being in. That's when reality is going to really set in. What happens? We are going to have a system that looks far different than it does today. One of the good things I think Trump is going to try to do is to bring Judy Shelton into the Federal Reserve. And she is a hard money advocate. The problem is the system as it is, you can't, it's going in one direction. It's got to go straight. There can't be any turns. And because it's so fragile, it's so precarious at this point. I felt good for a week. And I think, people generally speaking, well, half the country or a little more than half the country felt good from election day. I felt good from election day until yesterday when some of his choices from the cabinet came up. Elise Stefanik, it's like we're doing the whole thing all over again with war hawks in his cabinet. Yeah, especially if Marco Rubio becomes chief of staff, or not chief of staff, Secretary of State. He's a war hawk.
Most financial assets, including stocks and cryptocurrencies, have taken off sharply in the weeks following the election. Experts believe this is because Trump's policies are believed to stimulate economic growth and reverse some of the unfavorable policies of the Joe Biden administration. While assets like cryptocurrencies and stocks saw massive gains after the election, precious metals have responded in the opposite way. However, renowned precious metals analysts and bullion dealers continue to reassure stackers that the decline will be short-lived and that Trump's policies will be great for gold, silver, and other commodities. During his interview with Capital Cosm, Holter explains that all the underlying fundamentals that helped to pump gold's price all year are still in play and will become even more obvious in 2025. He is looking forward to a credit event, as well as healthy conversations about a return to a global gold standard. Let's get back to the interview.
The dollar has gotten a strong bid. It's gone from like 102 to over 106, and it's been a straight line since last Tuesday. If you look at charts, there is correlation between the dollar index and gold and silver. I would just say that gold and silver were certainly due a correction anyway. Now, as far as markets are concerned, I think obviously regulations are going to be relaxed. It's going to be easier to do business. There is some logic as to why the stock market's gone higher. But we've gone higher from nosebleed levels in the first place. When all is said and done, I think all that's going to be wiped out. And as I've said all along, I think this is going to become a credit/currency event that's going to topple pretty much the whole system. And the laws that have been put into place as described by the Great Taking, people are going to lose their assets through bail-ins.
Does this change anything in your outlook into precious metals?
No, not at all. The pullback in gold is what, 6%, 7%? And silver bigger, but silver's always more volatile than gold. I think it's interesting that a couple of weeks back, Russia came out and said that they're going to buy other commodities other than gold, and the first one they listed is silver.
Yep.
And I will just say that silver is such a small market where Russia to try to come in and buy, if Russia were to come in and try to buy 250 million, 500 million, $1 billion worth of silver, I think that would probably clean up any and all of available silver. So, whether they do that or not, to this point, Russia and China have pretty much let the U.S. go down the road to perdition on their own volition, rather than trying to push the U.S. off a cliff. because they don't want war. Now, if Russia steps up and breaks the silver market, yeah, those could be construed as fighting words, and you'd have a war. My guess is that Russia's probably, going to pick away with smallish trades, 25, $50 million, just to turn the screws a little bit, but not enough to put it over the edge. The situation, the way it is right now, well, I think the last number I saw was there's 406 paper gold ounces or silver ounces for every single silver ounce that exists.
Really?
I mean, how's that even possible? Yeah, if you look at the contracts, the LBMA contracts, the COMEX contracts, there's far, far more silver represented by paper than there is silver.
The crux of Holter's argument is that gold and silver remain unique in a world increasingly burdened by financial fragility. Unlike paper assets or fiat currencies, these precious metals carry no counterparty risk. They don't depend on the solvency of an institution or the promises of governments. That independence makes them especially appealing during times of uncertainty, like the one we seem to be approaching. The U.S. debt-to-GDP ratio, currently around 130%, is an undeniable sign of fiscal stress. Historically, when nations reach such levels, it signals either economic stagnation or potential fiscal crisis, especially if interest rates rise and the cost of servicing debt balloons. This adds immense pressure to the already fragile banking system, where cracks are visible in the form of declining profitability, growing exposure to bad debt, and risks tied to financial derivatives. Compounding this is the broader global economic situation, which seems precariously balanced on excessive leverage, inflated asset prices, and geopolitical tensions. In such an environment, the systemic risks are magnified. Banks, which are deeply interwoven into this framework, face potential blowouts if a major credit event occurs, whether from defaults, liquidity shortages, or a cascading loss of confidence. The message is clear for those heeding these warnings. Protect wealth by minimizing reliance on institutions and fiat assets. Gold and silver are not just hedges, but lifeboats in a system that increasingly shows signs of instability. Whether or not the dramatic collapse some predict happens imminently, the underlying vulnerabilities are undeniable, making this a time for financial caution and preparedness. Do you share Bill Holter's sentiments about the economic and political situation in the United States and believe that a crisis is inevitable? Please share your thoughts in the comments section below. Also, ensure you like this video, subscribe to the channel, and activate the notifications bell for more videos like this. Thanks for watching.